Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com, or you can find the link to the website in the description below. There are three stages of oil and gas operation: upstream, downstream, and midstream. Upstream refers to oil and natural gas production, while downstream refers to the refining of oil into gasoline, diesel, jet, and other fuels. These kind of stocks can really fluctuate based on the price of crude oil and supply and demand. Midstream stocks like Western Midstream Partners LP, traded on New York Stock Exchange under symbol WES, stores and transport oil and gas from wellhead to refineries and don't care about what price of crude is. And you might wonder why that is. It's because they are the toll keepers of energy industry and get paid whether the drillers make money or not. Pipeline profits aren't hit by asset bubbles or stock market crashes. Volatility in energy prices have almost no impacts on earnings. Because the company earns a fee for each barrel shipped, cash flows are steady like bond coupons. And best of all, midstream companies have little competition. No other method of transportation can move crude oil from A to point B cheaper than a pipeline. John?
Yeah, thanks, Mo. Western Midstream Partners LP is, as you noted, involved in gathering, compression, treating, processing, and transporting natural gas. It gathers, stabilizes, and transports condensed natural gas liquids and crude oil, and gathers and disposes of produced water. It also buys and sells natural gas liquids, and condensate. Now, its core assets provide midstream services for customers in two of the most active and productive basins in the entire U.S., the Delaware Basin in West Texas and New Mexico, and the DJ Basin in northeastern Colorado. The company's infrastructure is pretty broad, but I'll just give you a few points. They have 21 gathering systems, 69 processing treating facilities. I think it's something like 14,000 pipeline miles. And as you noted too, while energy prices can be volatile, 95% of its gas contracts are fee-based and 100% of its liquid contracts are fee-based. And this obviously provides it with direct commodity exposure protection.
And John, I was reading on incomeinvestors.com that this company reported a record first quarter 2024 net income.
Yeah, for the first quarter ended March 31st, 2024, Western Midstream announced total revenue increased 20% year over year to $887.7 million. The company reported record first quarter net income attributable to the partnership of $559.5 million or $1.47 per share. Now that's almost triple the $198.9 million or 52 cents per share recorded in the same period last year. This resulted too in Western Midstream Partners reporting record first quarter adjusted EBITDA of $608.4 million. Now, during the quarter, the company closed all previously announced non-core asset sales for total proceeds of around $795 million. And then subsequent to the end of the first quarter, it completed the startup of its Menton 3 natural gas processing plant in West Texas. This actually increased processing capacity at the complex by 300 million cubic feet per day to approximately 1.9 billion cubic feet per day. And thanks to the partnership's strong results and increased throughput expectations, management expects Western Midstream to achieve the high end of its previously announced 2024 adjusted EBITDA guidance and free cash flow guidance range.
And I know income investors will love this. This company hiked its distribution 52%.
Yeah, again, because 95% fee-based contracts and 100% fee-based liquid contracts, it actually helps provide Western Midstream with both direct exposure protection and predictable income. This helps it provide investors with a reliable, for the most part, growing base distribution and special or actually enhanced distributions. This past April, the partnership's board declared a quarterly cash-based distribution of 87.5 cents per share, or $3.50 per share on an annualized basis. Now that works out at current prices to a forward yield of 8.45%. And that represents, as you noted, a 52% increase over the prior annual rate of $2.30 per unit.
Talk a little bit about stock performance as well. WES Stock is also at record levels.
Yeah, record earnings, strong guidance, and growing base dividend is everything investors need to help juice Western Midstream Partners stock. And on July 5th, WES stock hit a new intraday record high of $41.73. Now, as of this recording, WES stock is up, I think, around 19% over the last 3 months and has climbed 45% year to date and advanced 65% year over year. And despite the market crushing gains, there's every reason to believe that Western Midstream Partners could hit additional fresh highs over the coming quarters.
John, thank you so much for your insights. Just to recap, Western Midstream Partners LP continues to be a great energy company reporting strong financial results and natural gas throughput. It also recently increased its quarterly base distribution by 52%. The outlook remains equally impressive, with management expecting its full-year adjusted EBITDA and free cash flow to be at higher end of the guidance. This could force management to increase its distribution again over the coming quarters. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.